Joe Vitale Wealth Management, here with this week's Gradient Investments Market Update. All information is gathered as of Monday, March 17th, St. Patrick's Day. We hope everybody had a great St. Patrick's Day. St. Joseph's Day coming up tomorrow. We're just in the second week of Lent. So here we go. Let's talk about what's happening in the markets. Last week, the major indices extended their decline with the S&P down 2.23%. For the fourth consecutive weekly loss, the NASDAQ was down 2.4%, and the Dow fell almost 3% at 298. Now, value stocks, which is the Russell 1000, value outperformed growth stocks, which was the Russell 1000 growth, losing 1.87% versus 2.53%. The international developed markets fared better, with the EFA and emerging markets down 1.1 and 0.74 respectively. Now, a notable winner for this week was gold, briefly hitting 3,000 an ounce for the first time. The metal is up 13% year to date. It was over 3,000 yesterday. Both the S&P 500 and the NASDAQ entered correction territory, meaning the indexes fell more than 10% from their highs in February. While the S&P 500 recovered some of its losses on Friday, it remained negative for the week. Meanwhile, the CPI report showed that core inflation, excluding food and energy, rose 3.1% year over year in February, down from 3.3% in January, and coming in below expectations, which is the good news. We've also seen a little rally in the market this week. We'll see. The futures are down a little bit today, so we'll see what happens. Upcoming economic release. This week's key economic reports will provide insights into the health of the consumer and the monetary policy. Retail sales data is set to release, was released yesterday, which we had a good day yesterday in the market, followed by the FOMC meeting and the Fed interest rate decision, which is going to be tomorrow. So we'll see what happens, what the Fed says, if there's a little hawkish, if they're saying if they're going to drop, that the market will respond accordingly. While major U.S. equity indexes are down for the year, some areas of financial markets are seeing positive performance, like bonds are outperforming equities so far this year, coming up 2.1%. As investors seek safety, international development and emerging markets are also outperforming. They're up 10.7 and 6.6 year to date, respectively, as investors look for opportunities beyond the U.S. This market shifts from the last 2 years. This is a market shift from the last 2 years where international has been down. Shows the value of diversification in investor portfolios. All eyes are on the Fed's interest rate decision tomorrow, with expectations that it will extend its pause on rate cuts. The path of further rate cuts has become more uncertain due to tariffs and mixed inflation and labor market data. So that's the thing, is if he drops rates, is it going to be good for the market? Or if he keeps it steady, then the market's happy that, well, at least we're not going into recession. Recent activity, there was trade activity in the fixed income total return with the purpose of shortening the duration of the yields, of the bond yields on that. Also, stocks in the news, Southwest Airlines, which is owned in the Core Select and the Contrarian Choice, the airline announced plans to end its free baggage policy as part of the strategic shift to revamp its business model as profits lagged other major airlines. So the stock did go up 12.6% for the week. And JD.com, which is owned in the G40I, this Chinese e-commerce company, surged 6.2% last week. As investors sought technology exposure beyond U.S. markets, the company is leveraging AI in multiple ways to enhance its business, including optimizing logistics, tailoring customer experiences, and improving inventory management. So we've seen over the last 10 to 15 years, literally the U.S. And domestic stocks have far outperformed international and emerging markets. But it does go back and forth. I know we talk a lot about diversification, making sure you're an international. I haven't seen, until recently, we haven't really seen the need to go international or emerging markets into the G40I. We've kept everything domestic in our G50 and the Core Select portfolios because it has been outperforming. And why do that? This is why. So if you did want to have some international exposure, we can do that. Still, a lot of us still don't have a lot of warm and fuzzies on the international because there's just so much going on right now. But with the tariffs and what's happening right there, I know there's a lot of concern. There's, oh my gosh, what's happening? What's he going to do? Everything's settling down. We're starting to see a lot of it's reciprocal. We're getting nailed for taxes or for tariffs all around the world. And a lot of what he's doing now is a reciprocal tariff. And it's a negotiation tactic as well. We're seeing that, he'll say 200% and all of a sudden they back down on their tariffs. So it's one of those things that it's going to have to shake out. We're going to have a little uncertainty until that time. We have to stay the course. We don't want to make any knee-jerk reactions and just say, oh my gosh, we got to go to cash or we got to do this. That's the worst thing in the world to do. We have diversification with safety and with growth for a reason, so we can ride this out, as you well know. So that's it for this week. Thank you so much for being part of the Vitale Wealth Management family. If you'd like to give us a call, 855-756-5700. Visit us at vitalewealth.com. Remember, anybody else that you know who could be retiring or needs some advice, send them our way. We'd love to welcome them into our family. And God bless you. Look forward to seeing you again soon.